Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2024, and we're diving into the third quarter earnings report of the New York Times. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss the New York Times' latest financial performance.
Let's start with a brief overview. The New York Times has reported its third quarter results, showing significant growth in digital subscriptions and advertising revenues. John, what stands out to you in this report?
The New York Times continues to strengthen its digital presence, adding 260,000 net digital-only subscribers this quarter, bringing the total to over 11 million. This growth, along with a 14.2% increase in digital subscription revenues, highlights their successful transition to a digital-first strategy.
Revenue and profitability overview. Let's delve into the financials. The New York Times reported total revenues of $640.2 million, a 7% increase year over year. John, can you break down these numbers for us?
Certainly. The revenue growth is primarily driven by a 14.2% increase in digital subscription revenues, which reached $322.2 million. This is a testament to their effective pricing strategy and the value of their bundled offerings. Additionally, digital advertising revenues rose by 8.8%, thanks to new advertising supply and strong programmatic sales.
And what about profitability?
The operating profit increased by 20.7% to $76.7 million, with an operating profit margin of 12%. This improvement is largely due to higher digital revenues, which offset the increased operating costs. The diluted EPS also saw a healthy rise to 39, up from 32 cents last year.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. The report mentions a 5.4% increase in operating costs. How is the New York Times managing these expenses?
The increase in operating costs is mainly due to higher journalism and marketing expenses. However, the company has managed to keep these in check relative to revenue growth, resulting in a 16.1% increase in adjusted operating profit to $104.2 million. This shows their ability to scale efficiently.
Looking ahead, what can we expect from the New York Times?
The company has provided strong guidance for the fourth quarter, expecting digital-only subscription revenues to grow between 14% and 17%. They also anticipate a 5 to 6% increase in adjusted operating costs, which suggest continued investment in their digital transformation.
Strategic initiatives and market position. John, the New York Times has been focusing on strategic initiatives to enhance its market position. Can you elaborate on these efforts?
Absolutely. The company added 260,000 net digital-only subscribers this quarter, bringing the total to 11.09 million. The average revenue per user also increased by 1.8% to $9.45, reflecting successful pricing strategies. CEO Meredith Kopit Levien emphasized their resilience in a changing media landscape driven by their diverse product portfolio.
And what about their capital allocation strategy?
The company repurchased 341,456 shares for $18.3 million, indicating confidence in their long-term growth prospects. This buyback is part of their broader strategy to return value to shareholders while investing in digital growth.
Risks and challenges. John, every company faces risks and challenges. What are the key concerns for the New York Times?
One significant challenge is the ongoing litigation related to generative AI, which cost them $4.6 million this quarter. Additionally, print advertising revenues declined by 12.6%, highlighting the shift away from traditional media. The income tax expense also increased by 27.7%, with an effective tax rate of 24.6%, which could impact net income if not managed carefully.
How is the company addressing these issues?
The New York Times is focusing on digital growth to offset declines in print. They're also actively managing legal risks and tax strategies to mitigate financial impacts. Their strong digital performance provides a buffer against these challenges.
Key takeaways. As we wrap up, John, can you summarize the New York Times performance and its investment prospects?
The New York Times has delivered a robust performance this quarter, with significant growth in digital revenues and operating profit. Their strategic focus on digital transformation and subscriber growth positions them well for future success. With a strong subscriber base of 11.09 million and continued investment in digital, they remain an attractive prospect for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on the New York Times performance in the comments below.